Right, I didn't click on it fast enough. Good afternoon. Welcome to the June PUG meeting. And we're going to get right into it. With that said, I hope everyone's well. We've got a few people missing. They said they'd be later. If not, they can all listen to the recording. And I know that we have a couple questions, 2 questions, in fact, of people who said they will not be attending out of the few that we have had pop up for this week that we need to cover. So let me get through the printouts. Hold on. And there we go. Got them. Excellent. All right, T said trading involves a risk of loss. Boy, that is an understatement sometimes. And again, it's not the battles. It's the war we try to win on a quarterly basis or at an end of a year basis. All right. So with that said, let's get into first question. We're going to start right away in our PUG meeting for this month. Let's see. For upcoming PUG, I have 2. This comes from Jude. I hope you have 2 questions he can answer regards to TOS and TS. For TOS, how do you set up options to see their value and pricing to uncover bullish convergence? Okay, so basically I don't look, you can chart options in Thinkorswim. It's relatively easy. For example, if we go into, let's just say, Boeing popped up, first thing possible. If you take a look at, if you wanted to track Boeing, might not be the best, but it popped up. These are July 15th expiration. We have the July 1st. So we got July 15th expiration. So if you were looking at something, you would first thing, and I generally look at is I never look at options first for an underlying opportunity. Personally, I look at the underlying stock pattern and the condition of the stock pattern. So for example, what I mean by that, and for this, I will go and change over to TradeStation, which we had TradeStation up with gold for a different question, but I had everything all teed up. You know what? Let's continue with one platform at a time. So we'll go over back to charts, and we're going to get and maximize sell here. And we've got 4 of my favorite tools. Persons Pivots, PPS, which is the buy sell arrows. We have on balance volume defining the condition of the participation of volume trend, and the relative strength comparing a product to the S&P 500. So we're going to punch up Boeing. And so let's go over to a daily chart. All right. So now Boeing, if I was to look at Boeing to say, hey, it might be some, we broke this mini downtrend in Boeing and we've come back to test the point of breakout. And now we sit here and another question would be from John R. If you think I did not going to answer your question, John, this is a major close breakdown. I can answer a lot of questions all with one chart. Pretty cool. What we have on our chart here are a lot of lines, and these dashed connected lines is weekly pivots on the person's pivot indicator, and the tiny little dots, hard to see, are 60-minute, the daily chart with the daily pivot. So what we need to do is we're going to edit this study, and I'm going to get rid of, or I'm going to uncheck the study on daily pivots. There we go. Apply and hit OK. All right. Now you can see that we pretty much have the weekly person's pivot. I'm looking at the header here. So what is the last conditional change? A market that closes below a prior bar's low, the high of that bar becomes what we call, or what I dubbed as the last conditional change, because the condition changed when a market makes an uptrend. It's moving up. The trend is a little 3-bar reversal to the upside. When the market closes below a prior bar's low, that becomes the high of that bar becomes now new resistance. Market goes down, and then when you get a new change, that last conditional change, what is the last condition? The last condition, we were in an uptrend, and the conditional change would be we reversed it. What defines a reversal? A market closes below a low. Anytime you're in an uptrend, the market generally will make higher highs, higher lows, closes greater than past or prior highs. When a market reverses that, there's a conditional change. So the last new conditional change is the market closes below a prior bar's low. So this is a close below the prior bar's low. That becomes the high of that bar, last conditional change. This did not close, or if it did, it's very close. This certainly closed below all prior lows, and that becomes a massive new last conditional change. When the market, if it's going to go back up and break out, generally speaking, last conditional change act as overhead resistance, and you'll see on a few other examples. So last conditional change is just simply a bar that closes below a prior bar's low for a bearish LCC resistance. A bullish support, LCC support, this green candle closed greater than past and prior highs. The low of that bar should act as support. Once that bar, that low is taken out, the trend is defined as now down. So we had, obviously, the market closed and there was follow through the downside. So if we can get through a last conditional change, and you can see in the last 2 weeks, we formed lots of new, fresh last conditional change. The high of this bar closed below that low. So we just look for new breakouts or resistance levels off of last conditional change. Market went up, it's going to meet resistance at that last conditional change. If the market's going to have any higher time frame resistance breakout, we got to get through the one that we had formed over here and the one over here. So once you have a daily close greater than those levels, odds improve that you've broken below last conditional changes. So that one, John R., if you're interested, we'll get back to your question directly, but that defines the last conditional change. What we're looking at now in this regards, and let me get rid of all the lines that I drew. Clear drawing set. Here we go. All right. So if you're looking for a bullish convergence, I'm looking for a product that might make a newer closing low against a prior swing closing low. What is a swing low? This is a trend line that went down without any noticeable uptrend. This may manage to make an uptrend. So this is a downdraft. This is an uptrend, and it was negated. The last swing low, the lowest close of that swing low is that day right there, which is marked as May 24th. The close of that bar, if you take a look where you're measuring the close of that bar on balance volume, was right there. So if you measure going forward, you say, well, we made a new lower closing low from that day. On balance volume also made a new closing low. So this would not be a bullish convergence pattern. If we made a lower price low and a higher volume rating, I would say we have a bullish convergence. And then I would be more interested in the condition of that bullish convergence. And I would flip then I would flip to looking at options on Boeing. And so generally, if people are immediately bullish, they may look at same weeklies, maybe 2 weeks out. And so you would start looking for unusual volume patterns. Today, we have volume here, looking at the July 1st expiration, 10 days away. You can see there's 1,400 volume. There's 1,600 open interest. Down below, 1,700 volume compared to 1,300 open interest. If this was 14,000 and that was 17,000, I'd say someone's probably done an unweighted bull spread. And if you look at the strikes, you're at 140, and then looking below, you're at 150. So that's a 10 wide spread. 140 strike call, 150 strike call. There is some activity. Tomorrow, Wednesday, you would look to see if the open interest increased or decreased, and then you would say someone packed on a new position. This is not unusual volume. This is not unusual volume because it's, it's when the scope of the open interest there. So what I would suggest is that if there was unusual option, then I would say, hey, I like that. If you said, I want to track that, if you right click, then you can add to a watch list, and it has the symbol. Right click on the call, the strike, or the bid, the ask. If you right click on the price, you can also send it to color code it. You can send it to a graph, a chart. You can add more information. You can do, and you can copy that symbol. So if I copy the symbol, I go back to a chart. I believe if I go another one way of doing it and hit enter, there's your option. So can you track and trade an option's performance as a price chart? Yes. Now, when you do that, the whole thing about options, and this is, I hope, this is a great segment to talk about for those that don't know. You can track an option. Why would you track an option? If you have an option that's very active, or product that's very active, maybe we could look at Tesla or Amazon, Apple, and a product that's heavily optionable. But if you have an option, if you think about what causes an option's value to decrease, the underlying price goes straight down if you were long a call. In other words, the underlying price goes against the direction of your option. If you're in a call and the market price goes down, the call is going to lose value. If you're in a put and the market goes up, the option is going to lose value. But if you're in a directional trade like a call option and you're long, you're bullish the market, that is, and the underlying goes up, then relative to your delta, the net rate of change of the underlying product to your option, if you have a at the money option that's a 50 delta, within reason, you're going to see an increase in that product half the 50% of the move. So if Boeing went up $10 today, your option would go theoretically up $5. Of course, it'd go up a little bit more because it's no longer at the money. It would be closer to the money. So as the delta expands, the value of the option expands. So that's the basic fundamentals of understanding option value. So if you're tracking the value of an option's performance, you must understand if the stock doesn't do anything and you have a very short duration till expiration life of time on that option, in other words, your theta decay kicks in, the stock might go up, but your option won't really move. Another problem with tracking options, if nobody's really active in your strike price, it's going to be tough to track the option's undertone value. So your best bet is to look at the underlying market. And if you have like an at the money or deep in the money or in the money option with shorter time duration. In other words, this is an option that expires in 10 days. And it's a 140 strike call. How do we know that? It says right there, 140 strike call. It's a July 1st expiration weekly. It has 10 days to expiration, including weekends. If the underlying Boeing rallies and goes to 140, 145, then you're going to see the progression of the value of the option go up. So yes, you can track an option's value, but if the market goes up to 140 on the last day of expiration, you might see the stock go nowhere and the value of the option going down. And if you're tracking the value of the option, it's not doing anything because theta is decaying the premium, even though the stock is not going down. So you need to, understand, why would I be looking to track an option? I always look at the underlying, and then I look at the if there is other areas of interest from people in options. So the essence of looking at Thinkorswim in trading, one of the areas that we could look at to see if there's any interest building in a product is by the implied volatility. And if you can see here, you got 68. Well, they're higher implied volatility because there's front month activity happening in the weekly options. It's also something's going to happen by Friday. These are going to expire, so it's do or die. But if you go out in time and you see a 60, a 55, a 57, let's say this was 60, for example, and this would have been the, let's say, pretend that 58.6, this is the July 29th expiration. If that was 60, it would be slightly skewed relative to the option months ahead of it and behind it. So as you can see, you're at 58.6, 58.61. So moral of the story is if your implied volatility is higher than the months or weeks before it and the weeks after it, it shows, all that shows that there's an increase in implied volatility. Why would that be an increase in volatility? What causes increase in volatility amongst one option strike? Demand for an option. So there's volume, somebody put a trade, either someone's bidding on a product and no one came down on the offer. So you actually can see an increase in implied volatility to determine if there's an increase in action or volume. In this case, if you notice, we go through, it looks like, here you go, 100, no, there's 12 options traded today, 12 and 12 on a 110, 100. It looks like some kind of a spread, possibly. 134 could be a ratio. Sell two, buy one, or buy two, sell one. Twice of 15, 2 times 15 is 30. So I always look at those numbers and say, yeah, maybe someone's doing some kind of a wide ratio spread there. It looks like a strategy because they're spread out between 100, 12 and 12 to 110, and then 15 to 34, twice as much. So someone might have been boxing a strategy. I'm not sure. But as you look at the volume here, there's some interest of volume today on the downside. Someone might have been done what they consider a risk reversal, selling downside puts and using that money to finance upside calls. In Boeing, July, I just looked at the implied volatility. It was, again, 55, 57, 57, and then 58 and a half. That tells me that there was some volume going on, some trading going on, and it spiked the implied volatility a tad. And you can clearly see here's the volume. We had 45, 75, 63, 50, 13, 28, and 80 out of the money options for 175 that expired July 29th. So the way it's laid out on Thinkorswim, we can take a look at whether or not someone else is in the options arena other than just me. And I don't like to be the only guy in the option. If I think, hey, I've got some inside information, that's a different story. But I don't have inside information. And what I have is I have technical tools that might alert me, and I have knowledge that I can bestow on others. How do I find opportunity? So I have scans that I can use for PPS buy signal. I can look at to say, hey, is there more accumulation in that stock? Is volume accumulating? Is that stock rising relative, outperforming relative to the S&P? That would show me an improved PMC relative strength reading. Again, if Boeing has improved volume, so if the OBV was rising, the relative strength went from weakening to improving, and that's fuchsia color. As the stock was going down, the relative strength was getting better, and as the stock was going up, so was the S&P, but the relative strength was outperforming. As the stock went up, it's still showing its relative performance is outperforming to the market. If this had better volume, I would say, wow, great looking relative strength, but it needed more volume. And if it had more volume in this situation and we were looking to break out of a maybe last conditional change resistance, the daily chart, a last conditional change, John R. Look, did this candle close below that low? Here's the low. It's a stupid question. And there's the close. This closed below that level. So therefore, the high of this bar will now act as new resistance. So yeah, okay, it traded through it, but it didn't close above it. A close greater than an old resistance helps to initiate that positive momentum. Otherwise, the last condition change candle acts as a resistance spot. So if today we had greater volume participation, if the relative strength was as good as it looks and price was closing greater than that or above that resistance, I'd be looking at Boeing's options and looking for, is anyone else seeing what I'm seeing? Maybe an institution is buying rather than buying the stock. Maybe an institution has some inside information. The FAA is going to do something, and then they would maybe be purchasing boatloads, thousands of call options, because they may have insights that there's a report, not that they know what the report's going to say. They just have better intel or knowledge that the report might come out on a day, 2 weeks from now, or a week from now. They might have information that maybe it was in regards to a part. I don't have access to a very detailed, specific subject matter like that on every single stock. So a firm, an individual trader that follows Boeing might, and therefore he would tell his trading desk, hey, we got a favorable ruling, or a ruling that might come out. It might be favorable. You guys might want to look at buying some Boeing upside options. And then it would pack in buying options on Boeing, and that volume would show up. And if they show up on the volume, let's say they think something's coming out by the July 8th, that implied volatility would go up to, maybe if there was interesting volume, it might go up to like maybe 60, 65, something unusual. As you can see here, you have a 150 strike call. There's 300 today of volume against 466 open interest. You know, we don't know if that was a spread that was done and they may be adding to the spread or offsetting the spread. But there was some volume here, so therefore the implied volatility is still a little elevated at 55. So the moral of the story is, to me, I mean, bottom line, I was giving a hypothetical example of maybe a trader. If these numbers were like 3,000 and 20,000, I would say, well, somebody knows something, and that implied volatility would be better. And if they knew something here, it would probably be a direct result that the volume was better. So again, I look for volume, and on a market, first thing I would scan would be the PPS buy, and then to see if the trend continues for an upside move with an accumulation of improved volume trend. As you can see right now, you know, this to me is a very neutral, slightly neutral volume pattern. Price is up relative to where it's been over the last 2 weeks or so, and volume is neutral. It hasn't improved, it hasn't disimproved, it's just neutral. So it's not a again, what I was saying is just theoretical, but I was trying to share with you how to spot opportunities. First, it comes by run scans, find out, hey, what sectors are doing pretty well. And as we have in the S&P 500 today, we had several names, Costco, Walmart, and generating a daily buy signals. And we also had some software names in there. But what's interesting, and what I like to show, and I'll teach this as I share in my community in the trading room. Let me get it. I like to use a sample, not of the Russell 2000, but the Russell 3000. And I like to use that because we get a lot of small cap, mid cap, and large cap stocks in the Russell 3000. For example, first thing that came up, McDonald's. We know that's not a small cap restaurant. It's a large cap, right? It's mega cap, so to speak. So the moral of the story, I will use the Russell 3000 for two reasons. A, to give me a good gauge of, are there buy signals more so in one sector than another? And in this example, you will notice that today, as we get down here, we had healthcare, XLV, biotech, here a biotech, there a biotech. Oh my God, it seems every single stock in biotech world generated a buy signal. If there's that much buying going on in the entire realm of stocks in biotech, it seems that if you get another day or so of more increased buying pressure via generating PPS buy signals, that shows that someone's really interested, and everyone's interested in buying that space. Now, which stock is the best one? That takes a little bit of work. You got to look at the volume, United Therapeutics. We could also take a look at the trade in UTH. United Therapeutics, 37.39. So someone looks like August 19th options there, and it looks like someone's buying a few options on this side. You can see there's not as much interest in the put side. So it seems there's more open interest and volume. Or excuse me, there's only one volume trade. There's a little open interest here. And volume in puts is non-existent today. No one bought a put option in United Therapeutics. It was up $9, but someone felt I don't know, courageous enough to buy a 13 lot on an Augie 220 strike call. So the implied vol is greater than the current monthly July. So it shows that there was some interest going out. Was it spectacular? Hell no. Is that a good gauge that something's going on in that stock? No, not really. It just means that someone feels a little compelled to buy that option versus in UTHR. UTHR. So let's take a look. So here's United Therapeutics. Volume looks good. Relative strengths, it's okay. It probably isn't a strong enough pattern to see newfound breakout, but it does show that the stock is positive, closing closer to its 52-week highs than closing at its 52-week lows at the very least. The whole concept of trying to find opportunities in running scans helps me to define what sector to go in. And if I feel that there's a heavy concentration of sectors, rather than going through the painstaking task of going through 100 stocks in a day, I can just take a look at maybe the ETF itself looks better, and I can go with an ETF breakout. And so therefore, the biotech ETF, IBB, like for example today, it had a pretty decent accumulation of volume. The price, the OBV, is higher than it was at the last swing high. It's actually equal to or higher to when prices were way the hell over here in March on the IBB, which is closer to the swing high of around 130. Price is now 111. If price equals its relative performance of on-balance volume, in other words, if I lied to you and said that this line chart was price, it's at or higher than the equal price than up here, you would say, gee, it should be price is probably up there. It's not. So that means one of two things. Either more people are going to want to come and buy this and it's going to break out and lead more volume to the upside, or people bought it and there's bad news and they're going to get out of it and the stock's going to go straight back down, or price is delayed reaction and we're going to see some upside. So this is a healthy sign for the biotech sector, and it's a representation of the fact that the scans showed a boatload of consolidation and concentration, a boatload, strong concentration of buying going on in that sector. So then we could go over to trade, and then we could take a look at IBB, and you'd say, gee, John, how do you find opportunities and unusual volume? You go 41. Okay, always weeklies have a higher implied volatility. That is 36, 35, 34, 38. Gee, 38. July 22nd, 38 is higher than 34, 35. And so there must be something. Maybe there's some earnings that are coming out that day, but there might be some kind of interest in here. And it doesn't look like a whole lot either. July 22nd, there wasn't any volume, a 10 lot in the 115.50s. And that's the only thing next to maybe a 29 lot over here in the 125 calls, a 31. These are open interests. There wasn't anything in volume today to speak of to really spike. So again, 36, 35, 34, 38. What's 38? What line was that? 38 was July 22nd. So this should have seen some, unless that volume, that 10 lot moved the needle on the implied vol. That was the only, and what are those? Oh, $6. That's kind of pricey. So someone bought a few options there. But again, I use that to say, gee, if I had like 400 or 900 or 800, something unusual, I would say, wow, someone must have some insights. So I'm not going to track an option on a call in that regards, in that space. Now, if I wanted to say, gee, the July 29th option, it looks like someone bought today a 15 and a 16 lot. That looks like a bull spread, 120, 121. Why someone would do that, I don't know, but okay. Or maybe they were just spreading it out. Tomorrow, if the open interest increases, it means maybe they were holding a position and building something more. So that's my 2 cents on how do we work and run an option and how you can chart and track an option, but why it's more important to track the underlying than tracking the option. Yes, you can track the option. Right click on the strike, right click on the side that you want. For example, right click, left click, excuse me, don't trade it. Gosh darn it all. Do it again, person. There it is. There it is. Right click, like I said, copy the symbology right there. Just hit copy. Go back to your chart, Control V it, and you'll put it in your space and you can track it in your charts. Okay? So we're moving on. Next question. John R. I have a few questions. The first is about a last conditional change indicator. When both daily and weekly are displayed on a chart, what's the best way to use them? I think the other actionable way, you have a daily chart with the last conditional change. Your daily chart last conditional change, that's a PPS sell until the market closes over that swing high. And you can take a look. The difference between the weekly and the daily would be the daily will tell you maybe in between the week, and a weekly also will share with you if this is a last conditional change for a last conditional change on a higher time frame. Let me get rid of the clear drawing set. All right, so here you got that resistance right there, the weekly. Obviously, we need the end of Friday to close greater than that line in the sand. The weekly, the daily right here, as you can see, is within that same week. It's just sometimes it's hard to find. So the daily, you can just flip it over from daily to weekly. I use dailies mostly rather than weekly myself. All right, and that's the best way to use them. And you wait for a breakout, a close greater than a daily close over a daily last conditional change, a weekly close greater than a weekly last conditional change. All right. Second question, looking at Commitment of Traders report, was there any signs that might be vulnerable for a sell-off? No, there really wasn't. And we do the Commitment of Traders report on a daily and weekly basis. In fact, here's the copy of the prior week's report. And if you look here, I do this every week in the newsletter. Every week in the newsletter, here it is. See, it just shows that what the small funds had a new short. And so as a percent, small specs had a short coming in. So this is one for the Gipper. So they were short a week ago coming into this. Since the market, the data is collected on a Tuesday and it's released on a Friday, your job is to find out what happened. And if you realize that this was from a prior week ago and coming into last week, from Tuesday to, again, Friday, boy, we had the big sell-off that occurred on Thursday. So what happened to the specs? Did they get out? Would they have gotten stopped out on the rally on Thursday before? So it's our job to see what the changes are in the positions of the Commitment of Traders versus the change in the direction of price from Tuesday's close to Friday when the information is released. If there's a major move counter to what these people were in, we're kind of guessing of what happened. The bottom line is, do you see this open interest? There really isn't a strong, big position of open interest in the market, except for this week. We just went from 3.1 million to up to 4 million right now, by the way. So this week we had increased. So now we're starting to build a bigger position in Commitment of Traders, and you got to take that under consideration. All right. John R., thank you very much. All right. So we've got Jude's question out. We've done and answered, hopefully, John's question. I got George and let's see. Richard L. asked, why do I put lots of emphasis on AD levels? I put lots of emphasis on advanced decline because when we're trading indexes, if you have an advanced decline that's rising, it shows people are really interested in stocks. When we get an advanced decline breakdown and a meltdown, it says everyone's selling all stocks. And so therefore the index and all stocks might be under pressure. This is the health of the market. Volume represents the participation. While we're on the subject, the NASDAQ might, relative to the SPY and relative to the diamonds and at this point, based on the chart patterns, the McClellan oscillator modified for data on the Qs has crossed on a positive territory. volume is increasing in a bullish convergence pattern on my volume indicator. We made a newer low relative to that low right there. And the advanced decline is also in a convergence. So it would set us up for a technology rebound soon. And again, at the end of the day, we did generate a PPS buy signal. So the Qs might relative based on the breadth of the market, the participation of the NASDAQ 100 looks more wholesome and healthier, especially if we get that trend to continue through the end of this week. I use the breadth of the market to understand the participation and where the money value is going. And between biotech and technology, it seems that's what reflects the participation the most in the market. And that's what the Qs have a heavy weighting towards. Thank you, Richard L., for that question. All right. Person's pivots. What does it mean when pivots expand in range? And I believe the question, I had it tied up for gold because the question was gold. What's the value? What direction is gold moving from the left of my screen to the right? Sideways. It's in a trading range. And these are daily pivots. When the market breaks out, it's saying that the next day it's saying it's in a bullish breakout mode. Bullish meaning red greater than green. So you have an upside movement in the pivots. The market never really conformed because it's still stuck in this little kind of trading range. Almost, look, the blue lines all these days. The average of blue line is the pivot. I mean, this goes all the way back since, what is that, May 31st. And we're still stuck almost every single day. The value of the pivot is the same. It's sideways. So if you're trading gold, you know, you got to say, listen, I don't like to sell support at the very least. And I sure as hell, I don't like to buy resistance red. So the person's pivots, the markets, it's only going to be reflective of the current trade, giving you the measurement based on the weight of the high-low close and what it's projecting to be for the next day. In a sideways range, one day was a big wide range and it's saying, well, tomorrow might be a narrow range. And in this day right here, which is on June 7th, it accurately told you that tomorrow you have one day of an expanded range, one next day it came right back within range. More times than not, this graph or the person's pivots have contained the market within its projected support and resistance. How do you trade it? Simple. Until we're in a trend, you got to assume you're in a trading range still. You can utilize volume to help you if there's an accumulation of a sustained breakout. And number two, just on rule of number of John Person is don't sell support and don't buy resistance. Buying resistance is a bad omen and selling support is no bueno as well. And final question, George says, where can we go to learn about the trading room? And where we can go to find out about the trading room is real simple. We'll go to Google, go to home. And if you go to weekly reports right here, weekly reports, and scroll down, trading room, planning and scanning, and you can find out exactly how to sign up for the trading room on a monthly or quarterly basis. And you got details, and it comes complete with a weekly newsletter, weekly video, and algo room, which you get again, what we run and are working on feverishly is working on the algo room, which has a 5-minute model for the E-mini S&Ps. Real simple. It shows, like, for example, it went long, it got stopped out on a trailing basis. So this was a long, it got stopped out. Looks like it was a long entry at 70, was 79 even. Got stopped out at 78 even, lost 4 ticks, went short here at 77 3/4 and took a profit at 71 even. So this green connected line is a profitable trade. Red is a losing trade. Every trade that's on the chart is reflected on when it got in, its position size, the time of the entry, the price it entered in, and the current last trade price. In the live trading room, we run these models, S&P, Spider, SQQ, ES, and Bitcoin, GBTC. In the overnight, we like to let the strategies run, and so people can see the performance if they're trading in the European session and overnight. And that's where the algo room runs. And then the main room, we talk about what's in the newsletter and opportunities during the week that we come up with stocks and any maybe potential option trades. And that is where you find that information. I wanted to say, well, that was a quickie. We had 4 really nice questions. Thanks to Jude. I think that was a good question, by the way, to ask about, do we chart options and why? And also, George, thank you for the understanding of pivots, as well as Richard L., who wanted to ask why we put emphasis on AD levels, and John R., who said the last conditional changes. Well, gang, that sums up today in this month's Pug Mating. I thank you for your time, and that's the end. That's the end, and I will see you guys in the live trading room tomorrow. Thanks, everybody. Have a great evening.